You're watching a recap from Investor XP, the show that covers investing for gamers. Check out the video description for details. It is Thursday, July 13th. We've got a great show for you today. We're going to be talking about an IPO, robots. Seagate is getting hammered today, and we got a couple of more long shot stocks that we're going to be reviewing on today's show. So let's go ahead, let's jump right in. This week we're featuring several long shot picks, and we have got them. They're all over the board, the different picks that we've been getting. This one is kind of out there. It's in the publishing industry, so it's definitely a long shot. The publishing industry has gotten beaten down, so we're looking at Scholastic Corporation. You know them as the company that you see when you're kids, or when you were little. You get those flyers with all the different books, and they're always pushing them. They're actually a publicly traded company, so let's go ahead and let's pull up some info on that. Scholastic. So here's their investor relations page, the different presentations that they have. I'll put a link to this in the video description. Let's start with before we jump in on that. Sorry, let's check the statistics. Scholastics. Then we'll pull up one of their reports that they have there. Shocked to see price of the stock and how many that's bought up pretty good. 30 times earnings, trailing PE, almost 30 times forward. That's expensive stock, especially in an industry that's fairly dead in the water there, publishing. They do have a dividend, 1% yield, 1.4% yield. They've had a little quarter-over-quarter, year-over-year decline. I noticed that. But $400 million, $5 million in debt, and $200 million in free cash flow. So they more than cover their dividend that they have. The question is this a dying industry? Can they transform over into more of the electronic books? What are their strategy for that? So looking at one of their latest reports here, there's not a ton of information in that where they talk about their technology push. Now, I think books are going to be around for a long time, but certainly the market is going to shrink. There's something to actually getting a book and reading a book. It has taken a hammering. So they're pointing to growth in some of their emerging markets, which is good. Those markets will lag behind technology wise, but the books are being killed out. There's no ifs, ands, or buts about that. So going through all of this, and they've been having some losses there. So I'm shocked at how many times earnings people are paying for this company. But anyhow, so here's their strategic technology transformation that they want to get through, and I'll have to look at the transcript that went along with this to understand more what they're talking about. But this is what you look for when they talk about their technology. What platform are they using to get the analytics, to understand the analytics? How much info do they have on the people? Are they using something like Amazon's? What's behind it? What's driving this? What are they going to use? Who are they going to partner with? That's a big deal on who they are there. You want to look for people that are using AWS, the Amazon's services and Amazon's cloud and stuff like that. That's one of the leading ones that is out there. So we'll have to see who they're partnering with. As far as a long shot goes, statistically wise, they look like they're financially sound to stay afloat for a while. It's can they transform and get back to growth? I don't know. Not a lot of analysts are covering them. I'll put a link over to Tip Ranks there. They're showing a 44, one analyst covering it, 4% upside. To me, not really, not a ton of upside there, but again, we got to think about this in context of our long shot stocks. If they can transform their business, which they have a solid foundation in all of the schools, they can transform that business to keep going on and sustain as things become electronic. They've got a dividend there that's 1.5%. You know, it's better than a bank gives you. So you got a good dividend amount there. Could be some upside. I would call this a safer long shot investment than some of the other ones that we've been looking at this week. Some of them were pretty crazy. Not bad at all. So am I going to jump out and buy it? Am I going to put it on my shopping list? Probably not, but it's something I may keep one eye on this one to see what they do and look for them in the news. In the chat room, it's a name that we know and trust. Yeah, so it's an interesting one. Long shot investment, Scholastic, one of the safer long shots that we've looked at this week, I would say. So go ahead and check them out and let me know what you think in the comments below. That's it for today's show. Let me know what you think in the comments below. Give us some feedback. We enjoy hearing from you, and we're trying to grow the channel. Subscribe if you haven't already so you get the latest investing news for gamers. Watch us live Monday through Friday, 1:30 Eastern, 12:30 Central. Thank you for watching. We'll see you tomorrow.